Hello traders, Gary Wagner with WFGForex.com, your daily market update for Forex Gold. It is Monday the 19th. This is the daily report. Gold under significant pressure for the second day in a row, currently trading at 1184.35. I am looking at a major support level. This was that 1186, 1187 that we have talked about. That support level, in fact, was broken. As you can see, I'm going to take a look at this one area. This is 1186. And that 118687 was based upon a Fibonacci retracement level, which was simply drawn from what we are calling wave 5 on our daily candlestick chart, which was this low to this high at 1265. Now, I've put up a longer term Fibonacci retracement because once we break through there, we really want to look at a couple of areas in terms of where support technically can be found. Based upon this Fibonacci retracement, which is off of this 1040 low and 1265 high here, our critical level, and we spoke about this yesterday, is right around 1180, 1181. We did test that low, as you can see right in here, but we are currently trading above it, as I said, at 1184.25. In terms of some of the fundamental news that's out there and some of the fundamental news that we watch, first of all, a couple of reports have told us that a weak U.S. housing market index report that happened today that limited the upside for the U.S. dollar but also placed some pressure on the precious metal. The dollar was up slightly, euro dollar was pretty much unchanged. By the way, Ireland's credit rating was downgraded on Monday today, as well as there being a breakdown in financing discussions between the IMF and Hungary. So a couple of interesting things, but according to Kidco News, traders are awaiting the stress test results from European Union's financial institutions due out on Friday. Some fears about Eurozone banks and the UE country's sovereign debt have been allayed recently ahead of the stress test results. The Committee for the European Banking Supervisors is testing 91 banks to see whether the banks can withstand a 3% decline in EU economic growth. Now that we're trading off the highs, we can begin to look at some of our Western technicals, especially the oscillator-based technicals that don't do us any good when we're looking at historical or new contract highs. In this case, the stochastics, you have seen they did cross as the market came down. They are going into what we call oversold territory. However, they are diverging. They are moving apart. And because of that, this is still signaling a continuation in the downside pressure. The next thing I want to look at is our MACD, which is, of course, our moving average convergence divergence, and those also are moving down. You saw them get slightly closer together here, but now they're beginning to move apart again, and once again, they are moving and signaling that the market, although it is getting oversold, is not run out of steam, potentially. Now, I did find an interesting read in our Bollinger Bands this morning. Of course, when you look at a Bollinger Band, what you want to look at is how it reacts when it goes to the top or the bottom of the band, and I'll give you some examples. Bottom of the band signals a buy, obviously. When we get to these tops right in here, it typically will come down, and as you can see, the market, in many cases here only in the middle, but in many cases when it exceeds these Bollinger Bands, it will then tend to come down. Okay? Now, we also got them very aggressively moving at this point where they were outside of those bands and did come down, but on this occasion here and again here, we have witnessed it going to the bottom of the bands. Now, that could be signaling a potential bottom in terms of the range in this market, so I find that the read on the Bollinger Bands, at least right now, is quite interesting. Lastly, what I do want to discuss is something that with this new data, I will need to digest over the next day, but I believe that at this point, it could be extremely plausible in terms of our Elliott wave count. And I do want to preface it by showing you why I was kind of staying away from this and looking at our A wave as still being in the marketplace itself in terms of a correct count. But direct rules of wave B is that it's usually 50% of wave A and should never exceed 75% of wave A. So 75, I've simply put up a Fibonacci retracement sequence from our 2 points, meaning right in here as our low and up here as our high, to get the following retracement sequence: 100%, 78, 61, 50, 38, 23, and of course 0. Now, we know that a wave B cannot exceed, call it 75, so that would put it right about here, but it is usually about 50%, which is kind of why I was looking at that 12, 23 as a pretty critical area, and that's right in here. However, the marketplace never even got close to that, and in fact, when it came down and tested and formed this low right in here, what we did see is on this next move up, on 3 occasions, and this is what we talked about, it had that resistance at around 1218. So here's what I'm looking at as a very, very plausible scenario in terms of a revised wave count. And that is, we did get our wave, A wave, corrective wave here. We did come and form a low. On our B impulse phase, if we go from this low here to these highs here, what you notice is it did come up in terms of a retracement above 38%. Not quite 50, but that still gives us a valid read on that call. And the reason that I'm looking at that is with these new lows, we now have an absolute zigzag in terms of a corrective phase. As I said, traders, with this new information, and the information simply came, I couldn't formulate this until I saw this new low on today's activity. But because of that, I do believe at this point that what we might in fact be witnessing is corrective wave A, impulse B, and we are on a daily chart, our final C wave. If that is the case, then we will go into this impulse phase much, much quicker than I had originally anticipated. We do need to see what develops, and we do need to see how this C wave holds out, because the C wave can either be 1.62 or 2.62, that of the A wave. So the A wave being pretty substantial here, this to be a C wave is going to carry us down much, much further on a zigzag pattern, and I will have targets for us tomorrow in terms of where I think that wave may take us. This has been Gary Wagner with WFGForex.com, your daily market update, wishing you, as always, good trading. We'll talk to you tomorrow. Bye-bye.